Zedcrest Wealth, the research division, has put out a new report on the banking sector in Nigeria. There it is, banks reset for the long game. And we're happy to have the author of the report, Gbeminiyi Shopeju, who is an investment research analyst at Zedcrest Wealth. Gbeminiyi, good morning to you. Thank you so much for joining us.
Good morning.
So tell us about the title. What does that mean, resetting for the long game?
Okay, so I mean, given what we've seen, right, we've come from a period where, if you look at from the CBN perspective, we come from a period of unorthodoxy where they are moving to orthodoxy in terms of telling the banks early 2024 to close all their net open positions, as well as this whole forbearance issue. Also, we are seeing that when they were asked to close the net open position, we saw that the windfalls that they got in terms of unrealized FX gains were a lot. We had bumper gains.
Yeah. So
all of that has come down now. So we are seeing that banks are focusing on core earnings, increasing their fees and commissions income, and as well as other sources of income that will help sustain their levels of profit. So that's what we mean when we say long game, because
Gotcha.
now we're focusing on core earnings.
Okay, gotcha. Makes sense. Thank you. All right, so you've got a chart where I think you've plotted the banking index against the NGX. And what is it? I think the banking index is in purple, NGX is in blue from early January through to early May. What is the chart telling us? The banking index has outperformed the NGX, so what's the story here?
Okay, I mean, so if you look at the chart, we're seeing that at the beginning of the year, the banking index was actually outperforming the NGX, but at some point, we're seeing it like move kind of in tandem. Even as of right now, it's still moving in tandem up until yesterday, where there was a bit of index weighting change, where the bank index saw to like 36%, but all that will normalize again, and we'll see like 18% gains and then 60% in ASI. So they're currently doing around the same thing. Okay.
Now, recapitalization, we're just talking about that with our prior guest on the stock exchange. Well, you do have a chart where you've looked at so far who's done what. So talk us through this. Is it Zenith and Access Corp at the top? There's Zenith, Access at the bottom. They're home and dry, and then you've got the others in the middle that are not quite there. So talk us through what we're looking at here.
Yeah, so I mean, this chart looks at my 5 coverage sectors. So out of the 5, we have just 2 that have actually fully met their capitalization limit. And in terms of the rest, we're going to be seeing them meet it before the 2026 deadline. So I know that GTCO, Fidelity, and FCMB, they all have plans to meet it before the end of 2026 deadline.
Okay, so they will actually bullish on them meeting it. All right. So I think our next chart we're going to be looking at is the whole forbearance talk. Now I know the banks have come out. We covered this heavily when this happened, when they said they shouldn't pay dividends anymore, at least until this is cleared out. Is any cause for alarm here, or are you satisfied with the notifications that the banks have come out with, stating that they will actually meet clear this regulatory hurdle?
Yes, I mean, personally, I'm satisfied, and I feel like when we go down in the research reports, we'll see the reasons why these banks have been provisioning way ahead of time. We have banks like Stanbic and GTCO that have actually cleared these forbearance loans even before this whole problem. So I'm satisfied with this report. I mean, with where the forbearance loans are, we might just see affect a few banks.
Yeah. Okay, great. Next chart, and help me explain this. You've got this NPL, what is this now? Coverage banks well positioned with adequate NPL coverage ratio. And NPL, of course, is non-performing loans.
Yes.
So what are the triple-digit percentage points you have on the bars? What is this here?
Okay, so I mean, coverage ratios look at how well these banks have provisioned for their NPLs, right?
Okay.
So we are seeing that Zenith has the most, with over 200%. And it makes sense if you look at Zenith Bank's cost of risk, it's about 7.3%, which is the highest in the industry, right? So we are seeing that Zenith Bank has been provisioning. So when you look at their statement, which says that they will clear it before H2, is not unlikely, because they are well provisioned to meet those risks. And a lot of these banks are over 100%, so they are well provisioned to
Gotcha. So the provision is being able to make provisions for those NPLs.
Yes.
Fantastic. Thank you for that. All right, now you've got some picks. You got 5 banks, I think 3 to tier 1. 2 of them are tier 2. Let's see if we can run through some of them. If you can tell us your buy, and I like this. You just put your buy. You picked your buy rating straight away. So let's start. Who we starting with? Fidelity Bank. And in fact, our last guest was talking about Fidelity Bank. You've got the rating, the ticker, some of their metrics in terms of their stats for Q1 2025, and then the share price performance versus the NGX. Right. So why do you have a buy on Fidelity?
Okay, I mean, so Fidelity for me is a buy for various reasons, right? Fidelity has shown consistent growth, consistent profitability, and also they have shown that they're actually diversifying their income streams, not just from interest income. So we saw that in their last earnings, that was Q1, we saw an increase in trade financing, which Fidelity is very well known for. So we're going to see that continue in the nearest future, and that will help drive growth in profitability in Fidelity Bank.
Great. Next up, I think, was GTCO. So let's put that up. Same metrics. You got the ticker, the share performance versus the NGX, and also their stats. Why do you like GTCO?
Okay, so I mean, GTCO for me is not just for me. It's I think a lot of investors, both foreign portfolio investors, everybody likes GTCO. Yeah. So minus the efficiency bit and constant profitability, we're also seeing foreign portfolio investors usually trade that particular stock. So when demand is high, we see the price of the stock usually like tick up. So we're going to see that continue, given the fact that GTCO is one of the fan favorites for foreign portfolio investors. Interesting.
All right, next I think is Zenith Bank. Why do you like Zenith? Why do you have a buy on Zenith?
I mean, so Zenith for me is still necessarily based on how well Zenith is able to provision for their for their NPLs, as well as their consistent profitability. So Zenith has always been constantly reporting profit. I mean, I don't see that stopping anytime soon. So when I looked at my model, Zenith was still a buy for me.
Okay. Next is Access Corp. Our last guest was also talking about Access and their expansion across the African continent and so on. Why do you like Access? Why do you have a buy rating on Access Corp?
Yeah, so I mean, Access Corp, like you said, expansion, as well as the other subsidiaries under the Access Corp group. So we're going to see that drive growth in Access Corp in terms of their profitability for the coming future.
Okay, so expansion there. And then FCMB, so again, I like how you spread this out between tier 1 and tier 2. Why do you have a buy rating on FCMB?
Okay, I mean, so the story of FCMB is one that is, I think people should watch out for, right? Yeah. Because FCMB is a tier 2 bank that's actually on the path of tier 1 greatness, exactly.
like Fidelity.
Yeah, exactly.
Yeah.
So, I mean, what I'm seeing in FCMB is the fact that FCMB is actually consistently reporting profits, and when you read their financials, or when you genuinely go through their financials, you see that FCMB is actually doing all they can to make sure that they're constantly reporting profits. So I feel like that will continue FCMB. And even if you look at their capitation plans, their subsidiary groups, if you look at their subsidiary like Credit Direct, we're seeing them make consistent profits in that particular arm as well. So that would drive holdco growth for FCMB.
Gbeminiyi Shopeju, Investment Research Analyst at Zedcrest Wealth. Thank you so much for this report. I enjoyed reading it. I urge everyone else to read it. I hope to have you back to talk banking more on the show. Thanks for your time.